You know, the stock market, it can feel like this super intimidating high-stakes game, right? Like it's only for the pros. But what if I told you a group of university students figured out a way to tackle it? That's what we're digging into today. We're going to break down the story of how this student team went up against the market, not with some crazy, risky bets, but with a really disciplined system. We'll look at their exact playbook, step by step, to see what we can all learn from how they did it. Okay, let me ask you something. If someone just handed you 100,000 ringgit to invest, where would you even begin? Seriously, the choices are just overwhelming, right? And that fear of losing it all? Totally real. Well, this is the exact challenge a group of students had to face. And trust me, their approach might just change how you look at investing.
All right, so let's meet the heroes of our story. We're talking about a team from University Science Islam Malaysia. These guys decided to jump into the Bursa Marketplace Investment Challenge. And just so you know, this isn't some small-time thing. This competition basically throws students right into the deep end of the Malaysian stock market.
And this is where things get really interesting. This is what made their approach so different. Their main goal? It wasn't about hitting some massive home run or chasing a hot stock tip. Nope. Their number one rule, the absolute foundation of their strategy, was super simple. Don't lose the money. And that focus, that obsession with preserving their capital, that's what separates a real professional strategy from just gambling.
So the big question is, how did they actually do it? How did they protect that capital? Well, it wasn't guesswork, that's for sure. They adopted this really powerful, proven framework called CANSLIM. Yeah, it's an acronym, and it stands for a 7-step process to find great stocks. You can think of it as their secret playbook for making sense of all the chaos in the market.
Okay, so what is CANSLIM, really? At its heart, it's a hybrid system. It combines two big ideas. The first part is what we call fundamental analysis, which is really just a fancy way of saying, do your homework. You're digging into a company's health. Are they actually making money? Are they growing? All that good stuff. Then, the second part is technical analysis, and this is all about timing. You're studying the stock's price chart, looking for that perfect moment to jump in. It's all about buying the right company at exactly the right time.
And here you can see that homework in action. The team was screening for companies with really strong numbers. Take return on equity, or ROE, for example. It's just a way to see how well a company uses investor money to make a profit. You can see Hong Leong's ROE is over 19%, which is really, really strong. They were comparing numbers like these, using hard data, not hype, to build a watch list of solid companies.
You know, having a strategy is one thing, but actually sticking to it day in and day out, that's the hard part. So this team, they did something brilliant. They turned their strategy into a systematic, 5-phase trading machine. It was almost like an assembly line, designed to make sure every single trade followed their rules, taking all the emotion out of it.
Just look at how they set this up. Every member had a super specific critical role. You had Alpha, who started things off by finding those fundamentally strong companies. Then the file went to Sharifuddin, who analyzed the charts to find the perfect time to buy. Dahlia was on risk control, making sure no single stock could wreck their portfolio. Then Belkis was the trader, the one who actually executed the plan. And, this is so important, they reviewed every single trade afterwards to see what they could do better. This teamwork, this system, it was their secret weapon.
Okay, that's the theory. That all sounds great on paper, right? But what did this machine look like in a real live trade? Let's break down exactly how they use their technical tools to make those buy and sell decisions.
All right, let's take a look at a real trade they made in Dufu Technology. Sharifuddin, their chart guy, spotted a classic pattern that traders call a cup and handle. And if you look at the chart, you can actually see it. The price makes this big U shape, kind of like a teacup. Then you get this little dip, which forms the handle. Now, for traders, when the price breaks above the top of that handle, that's what they call a breakout. It's a really strong signal that the stock could be ready to climb. So this pattern gave them a clear, data-driven reason to buy right then and there.
But what about the other side of the coin, managing risk? Because winning is only half the battle, right? For this trade in Telecom Malaysia, they used a tool called the Gann square of 9. Now, don't worry about the complex math behind it. All you need to know is that it helps pinpoint important price levels based on how a stock has acted in the past. In this case, it gave them a specific support level, a hard floor, you could say. And their rule was dead simple, totally emotionless. If the price dropped below that floor, they sold. End of story. No questions asked. And that's how you cut your losses before they spiral into big problems. So, they had the strategy. They had the system. They had the discipline. They had everything in place. The big question is, after months of trading in a pretty wild market, How did the student team actually do? Let's check the final scoreboard.
Get this, over the entire competition, they made a total of 112 trades. This tells you right away this was not some passive buy and hold and hope for the best strategy. No way. They were actively managing their portfolio, constantly cutting the losers and moving that money into new opportunities.
And what was their final net profit? 703 ringgit. Now, I know what you might be thinking. That doesn't sound like a life-changing amount of money, but you have to remember their #1 goal, capital preservation. They started with 100,000 and they ended with more. They didn't lose. And in the trading world, believe me, that is a huge, huge win.
In the end, this disciplined, systematic approach got them a 17th place finish. And that result is it's a powerful testament to their strategy. They proved that you don't need to take these insane risks to do well. A smart system that's focused on protecting your money can and often will beat pure speculation.
So, what's the big takeaway here? What can we all learn from this team's journey? I think we can boil their entire strategy down to 4 key lessons that, honestly, any of us can use.
First off, a system will beat speculation pretty much every time. You gotta have a plan. Second, teamwork is huge. Dividing up the work keeps any one person from getting totally overwhelmed. Third, discipline is your best friend. It's what protects your capital so you can live to trade another day. And finally, every single trade, whether you win or lose, is a lesson. Keep a journal, learn from what you did right and what you did wrong.
And that really brings us to the final question, the one I want to leave you with. These students, they chose to stay in the game. They focused on consistent, disciplined plays instead of just swinging for the fences and hoping for a home run. So for your own financial goals, which of those two approaches really makes more sense? It's definitely something to think about.